Forex trading jargon. Key terms explained for beginners. As a beginner in Forex trading, it's important to familiarize yourself with the key terms and jargon used in the industry. Understanding these terms will help you navigate the Forex market more effectively and communicate with other traders. Here are some essential Forex trading terms explained. Forex. Short for foreign exchange, Forex refers to the global decentralized market where currencies are bought and sold. It is the largest financial market in the world, with trillions of dollars traded daily. Currency pair. In Forex trading, currencies are traded in pairs. A currency pair represents the exchange rate between two currencies. For example, Euro-USD represents the exchange rate between the euro and the US dollar. Base currency. The base currency is the first currency listed in a currency pair. It represents the unit of measurement or the currency being purchased. Quote currency. The quote currency is the second currency listed in a currency pair. It represents the currency used to price the base currency. Bid price. The bid price is the price at which the market is willing to buy the base currency in a currency pair. It is the price at which you can sell the base currency. Ask price. The ask price is the price at which the market is willing to sell the base currency in a currency pair. It is the price at which you can buy the base currency. Spread. The spread refers to the difference between the bid and ask prices in a currency pair. It represents the cost of trading and is measured in pips. Pips. A pip is the smallest unit of price movement in the Forex market. It represents the fourth decimal place for most currency pairs. For example, if the Euro-USD pair moves from 1.2000 to 1.2001, it has moved 1 pip. Lot size. Lot size refers to the volume or quantity of a trade. Standard lot size in Forex trading is 100,000 units of the base currency. There are also mini lots, 10,000 units, and micro lots, 1,000 units. Margin. Margin is the collateral required to open and maintain a leverage position in Forex trading. It is a percentage of the total trade size that must be deposited in the trading account. Leverage. Leverage allows traders to control larger positions with a smaller amount of capital. It is expressed as a ratio, such as 1 to 100, indicating that for every dollar of capital, the trader can control $100 in the market. Stop-loss order. A stop-loss order is a predetermined order placed to automatically close a trade at a specific price level. It is used to limit potential losses. Take-profit order. A take-profit order is a predetermined order placed to automatically close a trade at a specific price level to secure profits. Margin call. A margin call occurs when the account's margin falls below a certain level, typically due to losing trades. It requires the trader to add funds to the account to maintain open positions. Long position. A long position refers to buying a currency pair with the expectation that its value will rise. It is also known as going long. Short position. A short position refers to selling a currency pair with the expectation that its value will decline. It is also known as going short. Fundamental analysis. Fundamental analysis involves evaluating economic indicators, news events, and other factors that can impact currency prices. It helps assess the intrinsic value of currencies. Technical analysis. Technical analysis involves studying price charts, patterns, and indicators to identify trends and make trading decisions. It focuses on historical price data rather than economic factors. Resistance level. A resistance level is a price level at which the currency pair has historically faced selling pressure, causing it to reverse its upward trend. Support level. A support level is a price level at which the currency pair has historically faced buying pressure, causing it to reverse its downward trend. These are just a few of the many terms used in Forex trading. It's important to continue learning and expanding your vocabulary as you delve deeper into the world of Forex trading.